from Southeast Asia. Any of our regulars out there, returning attendees, may notice that things look a little bit different around here. We just changed our webinar platform, and we're excited for you all to experience it with us. As always, if you have any questions or feedback, please feel free to send them our way. All right. This is the State of Trade. This is the July event for our regular series that offers you a regular monthly series that offers you experts with timely insights into the rapidly changing world of international trade. Before we get started, especially given that we've changed things up a little bit, a few housekeeping items. On the screen, you will see a sidebar to the right of the main stage. I have no idea which direction I should be pointing, so you'll just have to take my word for it. If at any time you need assistance during the live webinar, please message us in the help chat. You can ask questions through the Q&A tab anytime during the webinar. Your questions will only be visible to you and to our Flexport team. We'll do our best to answer as many questions as time allows. You will be able to find a copy of today's slide deck and a brand new shining Flexport report on sourcing from Southeast Asia in tabs at the top of your screen. Please feel free to download a copy of either or both. In addition, we're going to send over a few articles that our guest speaker, Professor Eddie Molesky, has prepared in the Q&A panel on your right. You'll also have access to the new report in the chat, and that has in it a new data released, Flexport CSCI, my acronym, the Southeast Asia Sectoral Cost Indices, some timely data analysis to let you make informed choices about the region. We're not going to blather. We will blather. We're not just going to blather. We have numbers. All right. We also invite you to join us on July 28th for our next Logistics Rewired webinar. You can find the link to register in the public chat. An on-demand version of this webinar will be available shortly after we conclude and can be accessed using the same link that you were sent earlier. All right. We've got so much good content today that I'm tempted to skip the legal slide, but our lawyers are fearsome, so I won't. So please keep in mind that all information provided in this webinar is presented based on the situation at the time and may not be customized to your specific situation. All right, now we got happy lawyers, and we can proceed to excellent guests. So next slide, please. I'm Phil Levy. I'm Chief Economist at Flexport. Joining me today, we've got two wonderful guests. We've got Eddie Molesky, who is director of the Duke Center for International Development and a leading expert in the political economy of Vietnam, Southeast Asia, and overall very smart guy who does lots of interesting stuff. Eddie, thank you for being with us.
It's really great to be here, Phil. Thank you so much for inviting me.
Great to have you. And we have a return guest, one of our favorites, Tom Gould, who is our Vice President for Global Customs at Flexport. Somebody who has spent a great deal of time solving supply chain problems and helping clients optimize and figure out difficult issues. So Tom, thank you for being with us today.
Thank you, Phil. Glad to be here.
All right. So let me give a bit of an overview of what we're going to cover today. We will start with a little bit of a historical background on what has happened with U.S. supply chains in Asia, more U.S. imports broadly. We will move on and we will talk about the development of Southeast Asia. That may be a slight misnomer to set your expectations accordingly. This is where Eddie shows us all kinds of cool things that are going on in Vietnam and explains why those cool things are going on in Vietnam. Then we will move on to this Flexport CSCI, which is part of our new report, where we look at what are going on with costs in key sectors, such as electronics, apparel, and furniture, both within countries and then with some comparisons across countries. We will then turn to practical implications of all of this, where we talk about what should you be thinking about as you consider reworking supply chains, and we'll conclude with a question and answer period. So that's what we have in store. Lots of good stuff, lots of data. We want to start, as this has not changed, we want to start with a poll. And so we want to ask you, this is the audience participation part, do you currently source in which of these following countries? So the one we're going to ask you now is if you source in, there we go, China, Vietnam, Thailand, Malaysia, Singapore, or another Southeast Asian country. If you source in more than one of them, pick the one that you consider the most significant. This is a technology thing that we're still grappling with. So if we can ask you, pick which of these. We want to be able to see what you are, where you're getting things from. We'll be able to show you in just a moment what the overall trends have been over the last while, where U.S. imports are coming from. But we want to see in particular what your interests are. So let me give you a little bit more time. Audience participation is always much appreciated. So get your votes in. Let us know literally where you're coming from on this, and we will tally that up and then move on to show you some things. All right, great. Terrific that so many of you have voted. Going once, going twice. Survey says, actually, what does the survey say? I'm not seeing results, but all right. I do not, let's see. We will try to get those results as best we can because I am not seeing them on the
Is that the
screen.
next slide?
I don't know, they appear. All right, we will do our best to find out what happened with that survey. This is absolutely not for lack of interest in where you all were coming from.
I was
You'll
on the
have
edge of
to bear
my
with
seat.
us. Oh, you saw it?
No, I was on the edge of my seat. I was so
I
excited.
know. We desperately want to know. Yeah,
Yeah.
you got to bear with us all a little bit. We're working out the technology. We're seeing what we can do. But
There we
thank
go.
you. Oh, wait, hold on. I'm seeing we're seeing results in a chat. So the results are 83% from China, 9% from Vietnam, 5% from Malaysia, and 3% from other Southeast Asian country. Interesting. So that actually fits fairly nicely with the pattern here and with a lot of the data we're going to present and the stuff that we're going to talk about. So thank you all for doing that. Sorry about the technical glitches, but the information got through in the end. All right, let's go to the next slide and let me just say a little bit, just in background about this particular graph. And I should explain this graph a bit. It's colorful, but it says something in particular. It's taking a selected group of Asian countries. Together, they account for roughly 90% of U.S. imports from Asia. And it's tracking them over a long time period. It's tracking them from 1985 to 2021. And it's not the levels of imports. It's all adjusted so you can see the share of this group that each country constituted. So I'm trying to make a particular point with this one, which is that what you see is there have been lots of shifts over time. If we were having this discussion in the late 1980s and saying, where do people source from? Where are US imports coming from? The answer clearly would have been Japan. That's the sort of black area there, which dominated everything else at the time. I should note, by the way, this is sorted, if you're wondering about where that order comes from of the countries, it's sorted by the last full year of data that we have. So it was what were the shares in 2020. So if you look at the shares of this group, China was the biggest, then Japan, then Vietnam, then South Korea, then Taiwan, and so forth on up. But that was in 2020. Clearly, those things shifted over time. One interesting thing to note is that if you look at Vietnam, for example, the green slice that steadily grows, it was nowhere to be found earlier. That this gives you an idea of how much this is a recent development, and that's what we're going to have Eddie talk about in just a second. There's one thing I wanted to mention about this, which is, so actually more than one. First, as I said, these are shares. It is true, absolutely, that the overall volume of U.S. imports grew significantly over this time. One of the things that's interesting, though, when you look at the data, is if you look at Asian imports as a percentage of overall U.S. imports, in 1993, it was about 44%. In 2020, it was about 44%. This has not been a story of Asia sort of overtaking everything as a share of US imports. Now, it did not stay constant over time. There were dips, there were increases. It moved, I think the range was somewhere in the 38 to 45% range. But an awful lot of what we have seen has been a shifting within Asia. And that's the point that I want to make, and that's exactly what this graph is supposed to show. And the other thing I want to sort of get across, and this is the economist in me, as you interpret this, is there is a quirk in how this data is reported. And I don't mean just the data we used, I mean all US import data, which is it doesn't do things the way economists would like. It doesn't talk about value added. So what that means is, let's say you had a product that you're in the late 1990s, and this product was 100% made in Malaysia. And you decide, you know what, I can do final assembly, accounting for about 10% of value added. I can do final assembly in China instead of Malaysia. I think I'm going to do that. I'm just going to shift those last finishing touches to China. The way that we account for trade stuff, if you have a significant transformation, and that final 10% of value added is done in China, I got to be careful here because Tom's listening to me, and if I get the language wrong, he'll call me.
You're doing well.
But if you do that final transformation, it then counts as a 100% Chinese good for U.S. trade statistics. And that, in fact, this is not a hypothetical, this could potentially happen. When people did studies around the year 2000 of how was China coming on so strong, that's often what it was, that some of the early estimates of value added were on the order of 10% for these goods that were coming out of China. That grew over time as Chinese supply chains developed, and it became much more significant, and they expanded out where they had just been doing the last stage, and then they did more stages. But it's something to remember when you look at the sort of direction of trade statistics and what countries these things are coming from, that that is not measuring, is not a very accurate measure of where is all activity necessarily, especially if you have sophisticated supply chains where different parts are produced in different places. Okay, so the theme I wanted to get across with this one was we've had this long history of reallocation within Asia, and we've continued to see that. And part of what we've continued to see, and in particular, if you look at that sort of expanding wedge with Vietnam, is an emergence of Southeast Asia and an increased interest. And this has come from a bunch of factors. Partly it's a natural evolution as costs rise in one place, as they did in Japan. One looks to a place where the costs have not risen as much. Of course, we've obviously also had policy conflicts that have played into this. People have reworked their supply chains in part of the pandemic. Whatever the cause, it has been that there's been a renewed interest in Southeast Asia. And so with that, next slide, please. We want to talk about how Southeast Asia has developed, and in particular, let's take sort of the flagship of this, the country that was sort of numerically the most significant, both in those trade statistics and in our poll, and let's focus on Vietnam. And Eddie, maybe you can guide us through what's happened and why. Oops, not hearing. Hold on, I think you may be muted.
Eddie, you're on mute.
You would think I've done enough Zoom and welcome presentations that I would have that figured out by now.
It's obligatory. It's obligatory.
Yeah, so why don't we go to the next slide, and I'll introduce. So I was really excited to see that so many people were interested in Vietnam, and especially this sort of relationship between Vietnamese and Chinese investment right now. So I want to draw on some data that we've been collecting in Vietnam for a long time. And for those of you that are interested, there's a link to the report, which is called the Vietnam Provincial Competitiveness Index, which has, I can only present like a small snapshot of the data, but there's a lot more that's there that you might be interested in seeing. And for those of you that are interested in working in Vietnam, you can actually go to the Provincial Competitiveness Index website, and there's widgets there that are available for comparing which provinces have the best infrastructure, which specific locations in Vietnam based on their economic governance, even things like land access, transparency, even informal charges. So that might be interesting to you. So the PCI consists of two parts. One is a domestic survey of Vietnamese small and medium-sized enterprises. That's about 10,000 firms. But the second part is a survey of about 1,500 firms per year. And we've been doing it from 2010 to 2020. These are all foreign investors in Vietnam. They come from about 44 countries, though most of those investors, as you can see, it reflects what it actually looks like in Vietnam, which is most of those investors are coming from other places in Asia, especially Korea, Japan, Taiwan. We've seen a lot. There are some U.S. investors in the survey, but foreign investment in Vietnam has been dominated by other countries in Asia. Um, it's about, our sample is about 34%, 35% manufacturing, 28% that are in services, particularly tourism, finance, insurance. In the manufacturing, one thing that we've noted over time, especially after the 2018 tariffs on China after the Trump administration, was a tremendous change in the distribution of foreign investors. Especially in the electronics, computer industries, though garments and light manufacturing remain pretty strong there. It's if most investors are small or medium sized. There are some really big ones, but most are playing smaller nodes in the production chain. About a third are directly exporting home, where 23% are exporting to the third country. So just to give you a sense of what the data looks like. So one thing that I wanted to highlight that I think for those of you that are working, we can go to the next slide, is there. Since 2018, we've been watching this very fascinating transition take place. So a lot of you know the strategy for investing in Vietnam for a lot of investors was what was called a China plus one strategy, which was have most of your supply chain in China and then to have one operation in Vietnam that you could use. If there were problems in the production chain, you could then expand the investment, shift investment to Vietnam. So that's what we've observed after the 2018 tariffs. And so we've seen that with Japanese companies, Korean companies, US companies. One thing that we've been interested in is Chinese companies investing in Vietnam, and this is something that's appeared in the data that is really fascinating. Prior to 2018, it was a very small amount of Chinese companies were exporting out of Vietnam. Most of them were interested in basically targeting the Vietnamese domestic market. But you can see since the tariffs on China were implemented, there's been a transition here where it's moved from 19% in 2018 to 40% of Chinese firms in Vietnam are targeting export markets. Some of that, there's a whole bunch of reasons why this might be happening, but clearly some of this has to do with the shifting in the tariffs and the shifting in the Chinese investor strategy regarding Vietnam.
Hey, Eddie, a question about this.
Yeah,
Um,
sure.
is the sort of firm nationality always clear? Is this because there's sort of clear ownership of this, or is this management, or how should we think about that?
Yeah, so we ask for the nationality of the lead investor in I would say that yeah, our data may be more accurate on this than official statistics in a way, because in the official statistics, a lot of U.S. investors are, say, for example, entering Vietnam from Hong Kong or from Singapore or even from Luxembourg. But in our data, they appear as U.S. investors. So we're getting the place where the lead company is in the supply chain is in this. So that though there, as with everything, nothing's perfect, and there are some cases where there is some there can be confusion here, in even among the firms themselves, too, in ownership structure. Yeah. Not all of these firms are 100% owned. These are shareholding companies with different distributions. Is there anything else on that, Phil?
No, that's great.
Yeah, okay. So I'll go to the next slide. I just wanted to give you a little bit of a picture of, and I would say that these numbers are, Vietnam, I think, arguably handled COVID better than most any country in the world, given its resources. But even Vietnam saw declines in investment over the past year among foreign investors. So you can see here the little time series that I've put on the left. You can see that a smaller share of firms increased their investment or added employees, and more firms ran losses in our data set than we'd seen in previous years. And on the right, I put a graph, what we call the business thermometer. It's such a small little thing, but I love this. graph because it's been a leading indicator for us for a long time of future growth in Vietnam. And it's basically just the share of firms that say they intend to expand over the next 2 years. And you can see here that number had been increasing pretty dramatically since 2012 hyperinflation crisis in Vietnam, but it's declined again because of COVID. And I imagine after the most recent Delta outbreak in Vietnam and announcements by companies like Nike about halting their supply chain, that also might be down. So it's just something to keep in mind that COVID has had a huge impact on the export industry recovered the fastest for Vietnam, but COVID has had a huge impact. Okay, we'll go to the next slide real quick. Yeah, so here I just wanted to show you really quickly something really interesting. In 2013 and 2015, we asked investors to compare Vietnam to other countries that they considered investing. And so we asked a whole bunch of places. So we asked them, what country would you consider investing? Most said Vietnam, most said China, Taiwan, Malaysia, and then compare on a range of different indicators about how they felt about Vietnam relative to that competitor. So if that number, you can see if that number is below 50%, it means that they chose their competitor over Vietnam. If it's above 50%, it means that they chose Vietnam over the competitor. And you can see the thing that I find really interesting about this is across almost all of those measures, less corruption, regulatory constraints, infrastructure, there's been a positive increase between the last time we did that, 2015, and then this year, and then in 2020. To just sort of summarize the big things, I think what people see as the lasting advantage of Vietnam is really interesting because it's sometimes considered a negative, is that Vietnam's a single party system. The government isn't going anywhere. And so institutions are considered to be stable. The two places where we've seen rapid change is investors feel that there's a lot less risk of expropriation in Vietnam, that property rights are more secure, and that there's less policy uncertainty in the environment. That's a second big increase. There's been modest increases in how they feel about tax rates. That's reflective in the Vietnamese corporate income taxes have been reduced in Vietnam to over time to 20%, and then lower in some special instances. And businesses now think they have a more active role in policymaking. There's been less improvements in other ones, though I'll show you some evidence about declining feelings about corruption and regulatory constraints from investors that are currently in Vietnam. All right, maybe we'll go to the next slide. Yeah, so I think for me, watching Vietnam since the biggest changes that I've seen after in 2016, one Vietnamese administration left and a new Vietnamese administration came in, and the two things that were most interesting to me in that transition was one, informal charges have declined dramatically in Vietnam as a result of a big anti-corruption law. And sometimes people think this is politically motivated, but we're seeing very rapid reductions in the share of firms that are paying bribes since 2016. It's been roughly halved from 60% to 30% in Vietnam. A second thing that's happened as a result of the 2017 investment law in Vietnam is that entry procedure. So the weight that firms have to engage in order to get investment licenses, in order to get their business licenses, has also really declined. So you can see that the one place, so you can see waiting periods in this graph, waiting periods for investment license renewal, and for the business registration certificate are all the way down. And in some localities in Vietnam, this can be issued online even within a day. The one place where there's been some hiccups has been in tax policy. In Vietnam, you need basically three things to invest. You need your investment license, your business registration certificate, and your tax code. Sometimes those can be issued together. Sometimes they're issued apart, depending on whether provinces have a one-stop shop or not. But the one issue is that get access to the tax code has not improved as fast as the others. The waiting periods have basically held stable over time. And in the most recent PCI report, you can see that tax procedures remain a little bit of a difficulty for some firms. Paying taxes is relatively easy. and buying tax invoice is relatively easy. It is much harder for finalization of tax to get refunds, especially on added taxes, have also remained relatively difficult for firms. I think we might have missed a slide. Can we go back to slide 14? Because I did want to show, here, this is what I did want to show too for investors that are interested in Vietnam. So this is what in Vietnam, the word that's used for bribes is informal charges or chi phí không chính thức. And so the PCI survey asks firms about, and we use shielded questions. So you can think that this is pretty accurate in terms of getting firms to admit the truth about the share of firms that pay bribes for any reason, pay bribes to inspectors, pay bribes during land. And you can just see the rapid declines since 2015 and 2016 on almost all of these indicators. So one, look at that first one, the regulations are an excuse for bribery has declined from nearly 60% to 35%. And that's not an accident. That really is a result of the anti-corruption campaign in terms of how officials are responding to it. And the second one, which is regulatory inspections, have also declined. That's a result of an effort by the Vietnamese authorities to unify inspections. So to not do inspections all at one time, or to do have a whole bunch of different inspectors come, but to coordinate the inspections. So labor inspections, environmental inspections take place at the same time in firms so that firms don't have to stop the production process. I don't want to say it's all perfect though. One thing that's gone really interesting, and we're still trying to figure out, is while the average inspections have gone down, there have been some firms that have been subject to an enormous amount of harassment, receiving 8 or more inspections per year, taking a large number of time, and that number is still too high. About 12% of firms are what we would say are in that sort of high harassment stage, while other firms have been left alone. And that's something we've been working with Vietnamese authorities about, is what's causing that targeting. If you ask Vietnamese authorities, they will say it has to do with their efforts to sort of rein in profit shifting by companies, and in terms of making sure that they abide by Vietnamese tax rules. So, and that's what maybe has led to that inspection of a few firms. But I think that we can talk about more about that in the Q&A. Anyway, I wanted to give you a sense overall of what I think is overall a pretty improving Vietnamese investment environment, and one that's changing rapidly, both as a result of the previous presidential administration in the US, Vietnamese reformers themselves, and then also I think COVID is having a significant effect. So I'm happy to talk about Vietnam, but I'm also happy to talk about Southeast Asia.
So good. I'm going to take you up on that right now, because I want to ask you a couple of questions before we move on, and
yeah, sure.
We'll give people a little pause from data, because this is great. You get great data, and I'm going to try to see if I can match in a second from a very different perspective. But on this, putting on your political scientist hat, you talked about sort of the stability in government in Vietnam. Has there been a sort of broader attitudinal shift? There can be multiple reasons for an anti-corruption campaign. You talked about how some of the regulations came out. What is the general view that you're seeing in Vietnam? What role do they see foreign investment playing in their economic development, and what is their attitude towards it, and how has that shifted?
Yeah, I mean, I think so. Vietnam, I think it's a great question. So, Vietnam is one of the most sort of foreign investment dependent countries in the world. It's been a huge player in their growth. It's been a huge player in their industrial development. Right. So right now, almost 70% of manufacturing exports in Vietnam are produced by foreign investors. So 30% of those are Samsung alone. So there has been this massive dependence on foreign investment, but at the same time, the Vietnamese private sector has also grown relatively rapidly. The state sector has declined, but the Vietnamese small and medium-sized enterprise has grown since what was called the Enterprise Law in 2000. And the big question for Vietnamese authorities right now is how to better connect the small and medium-sized enterprises in Vietnam to the foreign investors. So how to get small and medium-sized enterprises in Vietnam, the private sector, better connected to supply chains in terms of producing intermediate goods and services that the foreign investors depend on. That is one thing that's changed. I do think there, as we've been through this transition in China, there's been an effort in Vietnam to sort of figure out ways to improve domestic innovation, to produce human capital, with the idea of transitioning away from this sort of dependence on foreign investors for their access to international markets. I do think there's two more things that I would say that Vietnamese have become more concerned. As I said, there's been recent changes in tax law to deal with profit shifting activities and transfer pricing in Vietnam, and we can talk about those in detail because they're really interesting. They have become more and more concerned about that because foreign investors do place a little bit of a burden on infrastructure, maintenance, public services, but the revenue hasn't kept up to pace with what Vietnamese authorities think they need for that. And then the second issue is there's been a lot more concern in Vietnam because of where it's situated. Globally, with this long coast, worried about climate change and addressing the impact that foreign investors have on the environment in Vietnam. And those are two things that are bubbling up in the policy environment right now.
That's very interesting.
There's
Okay,
another
one more
aspect of.
question before I
Can I?
let you subside for temporarily.
Mhm.
The other question is, as we now broaden out and look around Southeast Asia, you could tell a story, as you did for Vietnam, where because of, say, U.S. conflicts with China, there was an opportunity. They jumped in, they took advantage. We saw in the data that Vietnam looked preeminent
Mhm.
in this. Why was this not the same story for other countries in Southeast Asia? Why wasn't it sort of the same rationale? Why Vietnam?
Yeah. Well, so I think so I'm sure that the people on this podcast probably or webinar know a little bit more about this than I do, but not there wasn't a China plus one strategy for all of the countries in Southeast Asia. So the places where that China plus one strategy seemed to be biggest were Vietnam and Bangladesh. I think there was some effort for that in Thailand and Cambodia as well, but Vietnam was the most obvious place beneficiary from that. I do think that Vietnam also has advantages that other countries in Southeast Asia don't have in terms of high levels of literacy combined with relatively low labor costs. That also made it attractive. Because Vietnam's labor cost as we'll see in a second, relative to the other countries in Southeast Asia, tends to be lower, despite its level of investment. And then I think also proximity to China, with its being right on the border, also played a role and was already connected to China in some ways. I think that has to do with it. Though you're already seeing, I would say, um, I think Myanmar is now currently off the table, but I was already seeing some effort of transition into other places like Cambodia, Laos, and Myanmar more recently, prior to the current sort of tragedy that's taking place in Myanmar. And Vietnamese companies themselves are starting to look into those countries as well.
Okay, that's great. Thank you very much. This stuff's fascinating. I
Mm.
appreciate it. All right, let's advance a bit, just because we've got lots to cover. And I want to introduce a different take on data. So Eddie gave us great stuff talking about sort of surveys and what companies are seeing. Um, this is an approach to see what can we see from cost data, something that we're often not able to. So this is the start of an exciting research project at Flexport. It's part of our trade intelligence program. Usually it's not easy to see cost data. We've been able to sort of tap Flexport data, and we want to show you some of what we found. The question we were asking, well, we asked a couple of questions. One question was, as we see investors moving into these countries in different sectors, what is this doing to costs of products? And second, to the extent we can, and we're just getting started on this one, what do we see when we do sort of costs in comparison across different countries? All right, next slide, please. So here's a first look at this. Is longitudinal. This is not comparing different countries because we've got these normalized so that their 2018 costs equal 100. Let me explain what this is, because it's going to be the same rationale. Here we're looking at the apparel sector, and we've got 5 countries to compare across. We've got China, which you'll see is the red line, which looks very, very stable right across as we go from 2018 through 2021. These are sort of, and then you've got more movement in Indonesia, Malaysia, Thailand, and Vietnam, um, in different ways. Okay, what does this come from? You should think of this as an analogy of some of the things to what we talk about as, say, housing cost indices, where what we've tried to do is track the same products over time from the same country and see what differences we're getting in price, and therefore, and then put together an index from these. So in the same way, you get things like the Case-Shiller Home Price Index that is able to adjust for whether this was a starter home or a mansion that was selling. We're able to look and control for the kind of products and hopefully pick up sort of broader price trends. So and we're going to do this across 3 key sectors. Apparel is the first that I'll show you. We're presenting quarterly data, and this is something that we're going to be updating and potentially improving over time as we sort of get more data and as we make more discoveries in our research project. But what you see here is, so these are all costs relative to 2018. China stays remarkably stable. What you see is Vietnam and Malaysia looking a little cheaper as time goes on for apparel, that you're getting something like a 3% drop in costs in Vietnam and somewhat more than that, more like 4% in Malaysia. Whereas you had sort of bigger swings in places like Thailand and an increase in Indonesia. So, all right. So that's apparel. Let's go to the next slide. Did we skip one there? I think we, hold on. That's okay. We'll talk about electronics. And
We skipped.
wait, I think we go one back and there might be furniture.
Yep.
There we go. Furniture actually looks much more stable in terms of costs. Again, you see China says, by the way, this is even more stable than it looks. So let me sort of flag here that you look at the scale on the left-hand side, this variation is minute. This is not going up 2%. This is going up a tiny, tiny fraction of a percent. So we have, unlike the apparel sector, we're really, these movements, if we had put that on the same scale as the previous graph, these would have looked like horizontal lines. So we show you this sort of minuscule variation, but the real story on the furniture is no story. That at least so far, these costs are staying fairly constant over time, over the sort of tumultuous 3-year period. All right, we'll get more variation on the next one. Let's look next, please. And here we go, electronics. Now we're down to a comparison of China and Vietnam. Again, we go where the data is, where the data are. But here we see, again, China, fairly well established, things staying fairly flat over time, not so flat in Vietnam. Eddie, you and I were talking about this a little bit earlier, what we were sort of seeing with the electronic sector. But here in Vietnam, you see a bit of a roller coaster where initially, as you go from 2018, a surge in costs, almost 10% up, then sort of back down, then up again. Actually, I'll just take a pause here to ask whether this surprises either one of you, Tom or Eddie.
Yeah. So, Tom, do you want to go first, or?
Sure. Yeah, actually, this doesn't surprise me. When I started seeing the Section 301 tariffs being imposed on products, a lot of companies were looking to Vietnam as an alternative sourcing. And the first thing that they said was, yeah, but prices are going up because so many factories were looking to start production in Vietnam. And so the companies in Vietnam saw that as an opportunity to increase prices. As things stabled out, and there we're seeing more competition from China, that we were seeing, again, the prices going down to be more comparable to China. And then when the pandemic hit and a lot of consumers were looking to buy more electronics devices, prices went up. I was a little bit surprised that the China prices would not have gone up as well, but I think that those are more stable just because of long-term history. And not as directly impacted by the pandemic.
Yeah. So that totally makes sense to me. It's funny. This graph is a little bit of a Rorschach test in a way, I guess, in that you get to see you see different things. So what I see when I see this graph is, so that first period, that 2018 period, that is immediately after the entry of the tariffs, and what you did see in Vietnam was a difficulty with absorptive capacity. Vietnam had like a little bit of that business, but there weren't a lot of workers that had the skill set necessary to work, and so you saw it was fascinating. Immediate competition for workers with a skill set appropriate for electronics, and you saw wage rates and benefits go up immediately there. And you also saw, some of the foreign firms were capable of just say running another shift, but other firms had to actually build infrastructure, and so that led to that cost going up. And then as those costs started to move through the economy, you saw more competition. Then it went down, and then that 2020 spike, that seems to me that is very much COVID related. That is the declines. The way I see it, those are the declines in the difficulties in the supply chain of getting those electronics out, the holdup in shipping that was leading to the increase in prices. That's the way I would interpret it.
Well, thank you both, and for that. And I also, this gives me a chance to remember to say something I should have said earlier. We emphasize this in the report, which accompanies all this, which has more sort of descriptive detail, but which is what we are measuring here is one component of doing business in this region. So this is literally based on what you would tell U.S. Customs the value of the product is. That is, of course, not the only concern that one has for doing business. There are, what are the logistics costs? In fact, this is exactly what we're going to turn to right after the CSKI is what are the sort of broader, full considerations of doing this? And in fact, as both Tom and Eddie were discussing, what are tariffs? What are other things? Those all play into this. So I should just make clear that this is really just talking about the production cost component, an important consideration, but by no means the only consideration for where one sources. All right, next slide, please. All right, so what we've been talking about up until now has been this question of tracking over time changes in prices. Here we look at a little bit of a different question, and it's got, there's a subtle thing, which is that we wanted to do some comparison in prices. Here's why this is tricky. That if you look and somebody makes a sort of high-end jacket in one place and you make a t-shirt in another place, then you can say, costs are much higher to make the high-end jacket than to make a t-shirt. But that's an apples and oranges comparison. It doesn't actually tell us anything. So what we looked at the start of this research project is what happens if you compare, if you're seeing the same SKU produced in two different countries. And so here the comparison is between China and Vietnam, the two leaders, both in terms of overall U.S. import volume, but also as you all responded to us in terms of where you're coming. And if we see a SKU, not necessarily same company, but if we see a SKU that's coming out of both places, what is the price ratio? What's the cost ratio for that? So this means that we're comparing, high-end jackets to high-end jackets, and we're comparing t-shirts to t-shirts as we do this. And so what we see here is just how much of a distribution there is in prices. How much are people willing to keep sourcing from one place, or is it essentially one versus the other? So when we see that sort of central or modal value there of 1.0, that means it's the equal cost for the same SKU across the countries. Higher values, China's more expensive. Lower values, Vietnam is more expensive. This is showing us over the whole sample to give you a bit of an idea. The next slide will let us maybe tell a story about what's happening over time. So next slide, please. All right. So here, what we're seeing is a lot of the interesting stuff happening in 2019, 2020, and 2021. This is a box and whiskers plot, which may or may not be familiar to all of you. Let me say a bit about how to interpret this. This is asking the same question we asked in the previous slide, but breaking it down by year so we could see what change there is over time. So each of these little boxes, the bottom of the box marks the 25th percentile. The top of the box marks the 75th percentile, and the line in the middle is the median. So you can then get a sense of the distribution. So what we see as a pattern here is as you go from 2019 to 2020 to 2021, there's less and less dispersion. So less and less dual production. All right, what does that tell us? What does that mean? This means this at least one measure of, I would take it as an unwillingness to produce in both places and to have the kind of multi-sourcing resilient supply chain that people have sometimes advocated for, which is, and to me, this has been one of the ongoing concerns is that when someone says source in multiple places, That's fine if it's the same cost in multiple places. You still might have a setup cost for each one. What if it's 10% more expensive to produce in one place rather than the other? Do you still produce in both, knowing that one is cheaper than the other? One way to read this story, and we're going to continue investigating this, is there's been a decreased willingness to do this, at least in our data, over time. All right, let's move on from here because we've just got a lot to cover. And you can read the details in the report. We want to do another poll. I think we've actually figured out our technology and all this. So we're going to ask you all another question in the lead up to this. And survey asks, when you think about sourcing from Southeast Asia, if you were so inclined to sort of move your supply chain around, is your primary concern labor costs? Is it skills and management available? Eddie was talking about sort of the degree of literacy that you might have in different countries. Is it public governance? We had Eddie's discussion of different laws, the anti-corruption campaigns. Like, is it logistics and transport costs? Or is it tariffs and trade policy? So let me, just as before, ask you to register your votes, and we will see what people come up with. And I think the key to our technical stuff we figured is you got to actually vote to see what everybody else is saying. So that's so I have voted, so I can actually now see what you all do this. So, but I don't want to bias anything. So thank you for all of you who have voted. Let me give a moment or two more for those of you who want to register your opinion, and then we will sort of take stock of what we're seeing. So, all right, let's take stock. Let's see what this poll is saying. We're gratified. Who would have thought that people who came to a logistics company webinar would be most interested in logistics? But it turns out that that is in fact the case, and that is where my vote was too. So you can have to subtract one if you want to get the honest value of this. But all right, less concern about public governance, but otherwise a fairly even spread. Eddie, what do you make of this? Does this surprise you?
And it doesn't actually. No, it's very much in line with what firms tell us in our survey data as well. I guess there might be a slight bias towards logistic and transport costs. I guess the one that did surprise me. You have to subtract one vote from public governance because that is mine. And that is less important there. Though I have thought I would have thought that regulatory costs and informal charges played a bigger role in decisions.
Okay. Great.
Interesting. I, of course, voted for tariffs and trade policy because that's my area. But I would have expected to see skills and management as well as labor costs being higher on the scales. But that shows what I know.
Well, we actually no. What's going to show what you know is the section that comes next.
Okay.
So this is great. Thank you all for voting. We're going to advance on this, and now we actually are going to have Tom give us sort of the big picture of what does one think about as you consider reworking supply chains.
Wonderful. Thanks, Phil. So we can go ahead and move on to the next slide. And, as my area really of expertise and my focus has always been on tariffs and on duties that are collected by the different governments on import and potentially on export, duties, fees, taxes, and so forth. And so one of the things that I've been talking with clients about a lot recently is really those duty saving strategies that companies have used in the past and how those can transfer from country to country as production moves from, say, China to another country. And there are a lot of things that really companies need to consider. And one of them is if you are dealing with a company, and I when you were talking about investment, foreign investment, one of the things that I was thinking about was the fact that in addition to the financial investment, when you have foreign investors in a factory that's looking to start producing in a new country, one of the things that those foreign investors often bring with them is knowledge about things like duty saving strategies that could be implemented. So, for example, in the apparel and even in the furniture sector, first sale is a strategy that's used often by companies in China. but it's not used nearly as much by companies in other regions simply because it's a complex tax saving strategy that requires knowledge. And if you have the investors, the people that are ultimately backing the factory, that have knowledge and have that experience with some of those strategies, then it makes it that much easier to move those strategies to other countries. Another thing to really understand, and that is kind of one of the short-term hurdles that we're seeing, is really the understanding of the rules, the understanding of the documentation types of requirements in order to not only just import or export out of the country and import into the destination country, but also to understand the requirements for satisfying the different strategies that are out there available. Like I mentioned, first sale, but there are also free trade agreements that may come into play as companies shift production from one country to another country. And each of those comes with their own set of rules, and understanding those can be a hurdle. And one of the things that I'm expecting to see, and one of the reasons I'm so excited about the reports that we're doing, Phil, is I'd like to see how, as companies mature in these other countries and they are able to start taking advantage of strategies that they might not have been able to take advantage of, to see if that also impacts the data that we'll be seeing. There are sophisticated systems that are sometimes needed to manage the data that is supporting that is going to be used to support the different programs. If we move on to the next slide, one of the things that I've been recommending to clients as we discuss the different strategies from the different countries is, remember that anytime you make a change to your sourcing or your destination, you have potentially different opportunities for duty saving strategies. One of the things that we've been helping our clients with a lot is really educating them on programs such as the GSP program or the free trade agreements. When you're importing products from China into the US, those programs aren't available because simply the laws don't allow it. But when you start moving your production and you start becoming a more global company with your sourcing, with your distribution, you ultimately start to realize that there are new strategies that are available to you. So, for example, if you're a factory that is looking at shifting production from China to Vietnam, and a portion of your sales are going to, say, Canada, you now have the CPTPP to include in your analysis. So Canada and Vietnam are both members of the trade agreement, the CPTPP. That's the agreement that replaced the TPP when the U.S. dropped out. So it could be that companies producing in Vietnam can take advantage of programs like the CPTPP when they're importing into Canada. And similarly, there may be programs that allow them to import into the different EU countries and take advantage of duty saving programs that are available. So it's important to understand your products and your source countries, your destination countries, and what programs are available. And once you understand that, then you need to start digging into what are the rules behind the programs. Because just manufacturing something in a country doesn't necessarily mean you qualify. You need other requirements, documentation requirements, maybe value-added requirements, or origin shifting requirements that might be necessary for each of those countries.
All right, excellent. Thank you for that, Tom. We're going to have a very short time for Q&A, but before we do, we're asking you all a question, one last question. If we can put the poll up, we had asked before, where are you doing business? Here we're asking about, what are you interested in? So from what you've seen here and elsewhere, which Southeast Asia country are you most interested in as a potential production source? So we are offering you Indonesia, Malaysia, Philippines, Singapore, Thailand, or Vietnam. This does not sort of run the whole gamut, but out of those, Which one intrigues you the most? Where would you like to explore and see that as a potential source? All right, we've already got 74 votes, including mine, but I had to do this to see what the rest of you are saying. I'll let you adjust in a second. Thank you for those who have voted. Let me give a moment or two more, and we'll see what people are thinking. All right, well, we can see what people are thinking. You can still get things in. I'm used to the old ways of doing things. Vietnam, heavily Vietnam, but actually heavily in the sense of, and that was where I put my vote, because we've been talking about Vietnam so much, and because I think it's interesting. But there's still a decent amount of interest across the others. So we've got Singapore coming in second, and then a rough cluster: Thailand, Indonesia, Malaysia, Philippines. Does that seem like a reasonable ordering to you, Eddie? Oops, can't hear. I don't know if we got the volume on you for yet.
It's a little bit of a surprising order given sort of historical patterns, and it would be interesting really to break this down by sector, because I imagine that different sectors might be interested in Singapore and Malaysia than in Vietnam and Indonesia. But I do think that from my interactions with a lot of investors right now, Vietnam is definitely a place that they want to know more about and are interested in exploring. So this may be Vietnam's moment. So that's sort of reflective, I guess, of this. Yeah.
Well, as we have a minute or so left, let me just sort of pose this question to both of you for quick answers on a topic that deserves more consideration. How much of this is a country decision versus a sectoral decision? Eddie, you were just saying that you thought that sectoral stuff was important. Is there a way to sort of see that balance, or do you have countrywide answers?
Yeah. So we talked a little bit. I think Tom probably can say a little bit more about this, but Singapore and Malaysia are much wealthier. The average labor cost is higher. They have, Singapore in particular has a bigger history with finance and more high tech industries. Malaysia has moved into that space, and so I imagine there's a different type of investor that wants to be thinking about those types of countries. I think the gap between Vietnam, Thailand, and Indonesia, however, has narrowed. I think they're competing for very similar industries, and especially recently with the growth of electronics and the auto industry in Vietnam. Those are relatively new entrants into Vietnam compared to Thailand and Indonesia.
And this poll really doesn't surprise me. The one thing that I'm hearing when talking to companies, one of the primary reasons that companies, have been so loyal to China for so many years is because China makes it easy for them to manufacture their products. If you want a product made and you go to China, you show them the product and they make it for you. If you go to other countries, you need to bring more knowledge of the production of that product with you, especially if you look at Latin America, where really what they're doing is assembling. They're not bringing any of the raw materials together. They're relying on their customers for that and for the knowledge. But when you go to China, they just make it easy they do all the sourcing of raw materials. They do the design work. They build the products. And I think that's one of the areas where Vietnam is taking advantage of, is they've seen that. And Vietnam, similar to China, is saying, okay, if we want to really compete as a major player on the world stage, we need to mimic the model of what China has been doing. And that is, we need to make it easy for the retailers in the US to buy products. We need to take away all of the complications from them. We need to figure out all the sourcing. We need to figure out how to produce the products. We need to figure out the quality controls. And we need to also understand and take ownership of all of those ancillary issues, like the environmental concerns, the labor concerns, and so forth. And I think that Vietnam has just really been the country to step up and be the ones that have been able to say to their customers, you want a product, I'll deliver you the product, as opposed to, you want a product, tell me how to build it and I'll make it for you. That's
actually a very, very useful note to end on. A helpful insight. Thank you for all the helpful insights. You can, to all of you out there, you can find stuff on the Flexport report, Eddie's great work, which I commend to you, that you saw some of the sort of very valuable data he has. And we hope you all found this useful. We invite you to save your spot for the next Logistics Rewired webinar. A link to that is in the chat box on your right. And with that, we conclude. Thank you all for joining us, and please stay safe.
Thank you.